Foreign investments are a key part of helping a country's economy grow. In both the past and future, they are one of the leading sources of funding for businesses and infrastructure developments. There is, however, one country that is continually lagging behind its peers when it comes to these foreign investments. We're talking about the Philippines, a country with some of the strictest policies when it comes to foreign investments. It has a law that citizens often call the 60-40 rule, which restricts foreign entities from owning more than 40% of a business in the country. This then creates a huge problem as it discourages potential investors. However, in recent years, things have started to change. The government has enacted a so-called game-changing law, a law which would allow foreign entities to finally own 100% of a business in the Philippines. According to experts, this agenda will finally enable the nation to be an attractive investment destination. But just how big is the opportunity for foreign entities? Or alternatively, have foreign investment interests already died down for the country? Before we move on, don't forget to leave us a like and subscribe for more. The change of the ownership law in the Philippines was enacted in the early months of 2022. Following decades of limiting foreign influence on the nation's businesses. Throughout these decades, there have been several debates and even some laws that allow foreign ownership to enter the country, but there are still some limitations attached to it. This recent shift, however, is said to be the biggest reform for foreign investments in the nation. This new legislation will allow foreigners to hold 100% ownership of every type of business in the community, with only a few exceptions in key industries. Nevertheless, these are enormous bonuses which may be a signal to the world that the Philippines is getting serious about receiving foreign investments. As the public finally opens its doors to foreign investments, in the next few years or so, it may finally experience tremendous foreign investments to rival that of emerging countries. This will enable the businesses and enterprises of the country to further push their innovation through strong funding. Moreover, having foreign entities have larger stakes in businesses would mean they have a stronger voice within the corporation. Leaning on local knowledge has thus far only benefited businesses to grow locally, but with the help of foreign intelligence, this will change and may push the Philippines to grow businesses capable of competing globally. Furthermore, the introduction of foreign investment will help push business valuation upwards. This means that business, whether it is publicly traded in the Philippine Stock Exchange or privately held, will be more expensive as there is an increase in demand within these enterprises. While the opportunity is indeed a massive transformation, it also comes with some disadvantages to it. The entrance of foreign businessmen to the country means that locals will have new competitors, and what's more terrifying is that these competitors may have higher funding and better knowledge. This has the potential to crush the local competition in the short term. In the long term, however, we believe that this will create a more innovative marketplace within the Philippines, pushing for better products, better designs, and lowering the cost of goods and services. These will all enable the citizens to be richer and have more money to spend as costs may get lower. These challenges may also enable foreign enterprises to monopolize certain industries and pull all the profits to themselves. It is only up to the government and local players to ensure that this won't happen. The Philippines is known to be an emerging market and a new industrialized country. This is also a big attractive factor for investors globally. Several experts around the world have even called that emerging markets are going to be the next big destination. The timely introduction of this change will likewise be an amazing feat for the nation. This newly enacted decree will be beneficial for its startup ecosystem. It is relatively known that during the lockdowns of the past few years, the country has produced internet winners and businesses that thrived and changed during the shifting times. This has given the likes of e-commerce, fintech, and blockchain an innovation boost. With these, there are now thousands of startups out in the land that have gained traction, and foreign funding will likely disrupt the status quo and give them a massive push.